If you're selling a condo, you might think the HOA has everything covered when it comes to insurance, but here's the truth. If the HOA's insurance is not enough, that condo may be unsellable to most buyers. I've seen this happen firsthand, and it can totally derail a sale of a home in a probate or trust. I'm Kim Ward. I am the broker of Horizon Real Estate's probate and trust help in San Diego, California. Welcome back to our channel, and today we're going to walk through some insurance issues that could happen with HOAs because it's become a lot more prevalent here in San Diego. We're going to talk about what the HOA issues might mean for you as a seller, what red flags to look for, and 2 real-life San Diego stories where the insurance was lacking because of the HOA. Let's start with the basics. Most condo complexes, they have what's called a master insurance policy. That master insurance policy, it covers the exterior of the property most of the time, roofs or tennis courts, or now pickleball courts, maybe the clubhouse, and even the walkways. But here's where things get tricky with insurance. It's what's inside your condo. The walls, flooring, cabinets, personal property is not covered by the master insurance policy. It's usually things from what I say is the paint in. Owners, in many cases, if they're smart and are protecting their property, they'll have what's called an HO6 policy. Again, that's the paint in coverage and your personal property. And here's why this matters. Lenders need to know that the property is sufficiently covered by insurance. And they do that before they'll even approve a loan. Obviously, they want to protect the asset that they are lending on. If the HOA master policy doesn't meet certain requirements, they will not loan on that property. Meaning FHA, VA, and conventional loans may not even be available to purchase a property that doesn't have enough insurance. Let me give you a real life example. My team and I were helping with a Tierra Santa, it's an area here in San Diego, a condo there, and we got it ready to go on the market. We did a few cost-effective repairs, we staged it, professional photos, all the works, put it on the market, got several offers on it, negotiated an offer, and we opened escrow. Yay! And about 10 days into the escrow, it was discovered that the master insurance policy was about 50% of what it used to be. Why? Because insurance costs have skyrocketed here in San Diego. I'm sure you've heard about the fires that were north of here and in California, and it's just the insurance costs have skyrocketed. My understanding is that the HOA board got together and they chose to not increase everyone in the condo complex their monthly fee. Instead, they just lowered the amount of insurance, making these properties virtually unsellable. And we found this out during the escrow. Now, from the board's perspective, they felt like they were saving the owners money in the complex. But the reality is, if there had been a catastrophic event, and I'm not even sure if they've fixed the insurance by now, but in the case of a catastrophic event, and this property is actually on a canyon, the people could be wiped out and they wouldn't get their properties rebuilt because there's not enough insurance. Back to the idea that we were already in escrow. We did everything we could to try and convince the buyers that there was a way around this being able to get a certain loan. We found other types of loans for them, but they weren't having it and we ended up canceling. What happened eventually is a cash buyer came in, and instead of getting $600,000 for this condo, it sold for a little less than $500,000 for cash. Of course, we had no idea. We learned on the job and we managed to get the property sold, but it was not an optimum experience for our clients. And there's a bigger lesson here. If you're a trustee, executor, or an administrator handling a condo sale, HOA insurance isn't just background paperwork. It can directly affect the following. It's going to affect how many buyers can qualify to purchase the property, because there are these unusual loans you can get, but Like I said, they have higher interest rates and they're not great loans. It can affect the timeline to close. Obviously, in the case of the condo we were helping with in Tierra Santa, it did affect it. We didn't close. It got canceled. And just as in the case of the Tierra Santa condo, it affects the actual sales price. It will sell for much lower than if there was the ability to get a loan on the condo. For estate sales where families sometimes already feel kind of stressed, finding out during the escrow process that the buyer can't get a loan can be very overwhelming. Now, not all stories end up as bad as the Tierra Santa condo. Let me share another example with you. We had a trustee selling a beautiful condo in Claremont. It was updated, it was well priced. A buyer came in with a conventional loan and we thought, yay, we're in great shape. But when the lender reviewed the HOA documentation, including the insurance on the property, they flagged something that was unusual. The master policy wasn't carrying enough water damage coverage. Again, at some point, the HOA board had changed insurance carriers to save money, and in the process, they lowered the coverage again. That denial came as a shock to the trustee. I remember them saying, how can an HOA board make a decision that will block my sale? Here's the good news. In this case, the buyer was very motivated. And with some creativity, we found a solution. The buyer purchased what's called a supplemental HO3 policy. And this filled that gap between what the insurance was covering for the HOA and actually protecting the lender and the new buyer. This did delay closing by several weeks because we had to get all this put together, and it did cause plenty of stress, especially for the buyer side, because they really wanted this condo, but we did get the transaction across the finish line. What is the key takeaway? Insurance shortfalls, they don't have to kill a sale, but they do create a lot of headaches, sometimes delays, and occasionally the costs that no one saw coming. In the case of the HO3 policy, that is an extra yearly fee that buyer is going to have to pay unless and until the master policy is back in force the way it should be. So what can you do to protect yourself if you are a trustee, executor, or an administrator, and you're preparing to sell a condo of a loved one who's passed away that's in probate or trust? First, you're going to want to request a certificate of insurance. And if you are already working with professionals, real estate professionals like us, we can help get that for you easily. You're going to want to get that because you want to make sure that the insurance is up to what the lenders are going to want in order to loan on the property. The next thing is to know your buyer pool. If the HOA coverage is insufficient, you may be limited to cash buyers. Again, this is going to affect the price and the marketing might be different. Of course, you want to work with an agent who understands probate or trust sales and also understands what an HO3 policy is and what a certificate of insurance is, those kinds of things. You want to make sure you have somebody who has a lot of experience. And the reason is because these transactions, they already come with a lot of moving parts. Having someone who knows the red flags, like the HOA insurance, can save you from unpleasant surprises. You want to also communicate with the HOA board or the management company. Sometimes they don't realize, like in the case of the Tierra Santa property, I don't think they realized what they had done. You know, while they were trying to do some cost-saving decisions for all the owners, but is it worth it? Especially when the owner goes and tries to sell and everybody keeps getting surprised that this is an issue. HOA insurance, it's not an exciting topic, but it's one of those details that can make or break a condo sale, especially when it's involved in a probate or a trust. If you're preparing to sell, make sure that the condo is ready for the market. Our team would be honored to help you here in San Diego, or if you're outside of this area, we have a network of great real estate professionals that can help you through this process. You can also find our 3 books on Amazon. We'll put the links down below. You might find them helpful. Also, we wrote them with stories and guidance just for you. And as always, we'd love to hear from you. Are you ready to put a condo on the market? Did you know about this HOA insurance potential issue? And what did you learn from this video? Thanks for watching. I'm Kim Ward. See you next week.